Welcome back. The White House is now fighting a trade war on multiple fronts. The conflicts stretch across 3 continents and involve most of the U.S.'s biggest trading partners. Take a look here. Mexico, Canada, China, Japan, Germany. Together, they account for over half of the U.S.'s entire trade all of this year. All have become targets in President Donald Trump's trade war. For investors, the tariff friction is triggering a global flight to safety. Yields in the German Bund, viewed as one of the world's safest assets, is actually now at a historic low. Adam Posen is the president of the Peterson Institute for International Economics. He joins us live now. So, Adam, thank you so much for being with us. So why is the president so adamant about fighting these trade wars with multiple countries all at once?
I honestly don't know, Zane. I don't want to get into his tactical mindset. I think the more important thing, which is revealed by your intro about the market reaction, is people are waking up to the fact that this is no longer just a negotiating tactic. This is something where he's being driven by ideological forces, where he's weaponizing tariffs rather than trying to get deals, and where, frankly, other countries are saying, why should we bother doing deals if he's going to behave this way? So I think that's the story. It's what's in Trump's mind. It's now getting out of his control.
Okay, so just explain to us what sort of impact this is having when it comes to investors fleeing to traditional safe havens. I'm talking about gold, the bond market, Japanese yen. Just walk us through that.
Yep. No, absolutely. So usually when the U.S. gets involved in a trade conflict or anything with geopolitical ramifications, there is a flight to safety. And the flight to safety, as you imply, tends to go either into dollar assets, into countries that are seen as safe repositories, their bonds, and occasionally into precious metals like gold. What's interesting about today, as you mentioned in the lead-in, is the German bunds have been a beneficiary of the safe haven flow this time. And while German bunds usually benefit from fears within the euro area, it's rare for bunds to benefit when the U.S. is attacking, particularly attacking the global auto industry. I mean, half of Volkswagen's exports of autos coming to the U.S. are produced in Mexico. So for people to be using the Bund as a safe haven today and seeing the euro go up a tick is really a statement that people are not finding the U.S. as safe as they were a couple days ago.
Interesting. And so when you combine all of this, which really caught the markets by surprise, what's happening with Mexico, in addition to the U.S.-China trade war, I mean, what does that do to overall global business confidence?
I think you're right that this has to be seen in the broader context. I mean, that we are seeing now, China announced, I think, overnight that they have a potential list of companies they could call unreliable, that they could treat the way the U.S. treated Huawei, that we are in an environment where one thing feeds on the other. AMLO, the Mexican president, has been quite restrained in his response, but this is no longer just about Mexico-U.S., and this is about what kind of environment globally there is for real investment, not just speculative flows, but companies making decisions where to put plants, how much to do R&D. And this is a world that's what I've referred to in the past as the post-American world economy, one where the average uncertainty is higher and, unfortunately, average returns on investment are lower.
So, I mean, how do you handle this as a U.S. business that obviously relies on Mexico for certain parts? Because on the one hand, you may anticipate that perhaps if worst case scenario, the tariffs would increase 5%, 10%, 25%. But best case scenario, you sort of think, well, you know that this is a sort of real tough negotiating strategy by the president, and it will likely, in the end, get resolved. So with those 2 factors, how do you handle that as a U.S. business?
If I'm I mean, I can't speak as never having run a business, only a nonprofit and government agencies, but my understanding would be no matter how high a probability you put on this being resolved, this is telling you that it's hard to say anything's ever finally resolved, and this tells you it's very unlikely you're going to see USMCA get passed through Congress anytime soon. So you have to start diversifying your supply chain. You have to start thinking about alternatives in terms of sourcing and marketing. This is very hard for companies in getting sourcing from Mexico, frankly. It's like UK exit Brexit. You know, this is a deeply entwined economy with huge, for good reason, good economic investment reason why they're so entwined. And so substituting for it is hard. It's not like some plastics manufacturer of toys shifting from China to Vietnam, which is actually much easier.